All right, so everyone's talking about the AI revolution, right? But what if I told you the real story? The biggest part of this whole thing isn't about the chips or the software. No, it's about something way more fundamental. Something that's been hiding in plain sight this whole time.
I mean, think about it. What if the real bottleneck, the thing that's actually going to define this era and unlock trillions of dollars in value, isn't the digital brain we're building, but the physical body it needs to live in?
Exactly. The biggest story here is the physical infrastructure. It's about power. We're talking about the absolutely massive build-out of energy generation, transmission lines, and cooling systems, all just to feed these new data centers, which, let's be honest, are basically the new factories of the 21st century.
So let's dig into this, the billion-dollar power problem. To really get a handle on what's happening here, you first have to understand AI's just insane appetite for energy. And believe me, the numbers, they're staggering.
Okay, look at this number, 945 terawatt hours. By 2030, that's the projected global energy demand just from data centers. Now, a terawatt hour is it's a mind-boggling amount of energy. To put that into perspective for you, it's more than double what they use today. We're literally talking about having to build a new energy system from scratch the size of a large country's entire grid just for AI.
And here's the reality check, because it's not just about making more power, it's about getting it to where it needs to go. Right now, in the US alone, there are over 2 terawatts. That's 2,000 gigawatts of new energy projects just sitting there. They're stuck in what are called interconnection queues, basically just waiting in line for years to get plugged into the grid. So you've got this explosive demand on one side and a delivery system that's completely choked on the other.
And that brings us to this quote, which really nails it. Energy supply becomes a core pillar of AI infrastructure. This really gets at the new reality. See, for decades, energy was just another line item on a spreadsheet for a tech company, a cost to be managed. Not anymore. Now it's a foundational strategic pillar, right up there with the chips and the networking. Because without a secure, massive supply of power, the whole AI revolution just grinds to a halt, period.
Okay, so let's deconstruct this AI factory. If we're going to think of these data centers as factories, what are the actual moving parts? What are the core components? Because it's a really complex system, right? It's like a stack of physical infrastructure where every single layer has to work perfectly together.
You can really break it all down into 3 critical layers. First, you've got power generation, actually making the electricity. Second is the grid and transmission, getting that power from the plant to the factory. And third, and this is the one people often forget, is cooling and water. You have to deal with the insane amount of heat all this computing creates, and that's where water becomes absolutely critical.
So when it comes to the fuel for AI, it's not a one-size-fits-all thing. These data centers need power that is on 24/7, no exceptions. That's why you're seeing this kind of renaissance for nuclear power. It provides that super stable, always-on baseload power. Then you have natural gas, which is great because it's dispatchable, meaning you can fire it up really fast to balance out the grid when demand spikes. Of course, you got renewables like solar and wind getting locked in with long-term contracts. But here's the really interesting part. This rise of behind-the-meter generation. Data centers are literally building their own power plants right next door, just so they can jump the line and bypass the grid's insane delays.
But like I said, making the power is only half the battle. The grid itself, honestly, it's the single biggest bottleneck in this entire system. We're talking about 5 to 8 year lead times for new transmission projects. Think about that, 8 years just to build the power lines, all because of regulatory hurdles and all sorts of local issues. It's gotten to the point where the simple ability to move electrons from point A to point B has become one of the most valuable and scarce commodities in the entire AI race.
Now, as these AI factories are running full tilt, they are just cranking out unbelievable amounts of heat. What you're seeing on the left is the old way of doing things, traditional air cooling. Blowing cold air down one aisle and sucking hot air out the other. That worked fine for server racks that were pulling, say, 40 kilowatts. But the new AI racks, they're pushing past 100 kilowatts. 100! Air just physically cannot get that much heat away fast enough. So the entire industry is being forced to shift to what you see on the right. These incredibly complex, direct-to-chip liquid cooling systems. And let me be clear, this isn't some fancy upgrade. It's an absolute necessity, driven by the basic laws of thermodynamics.
And that big shift to more advanced cooling brings us directly to water. A single large AI data center can guzzle up to 5 million gallons of water a day. That's as much as a small city. Most of that is for getting rid of heat through these huge evaporative cooling towers. So suddenly, things like water rights and local water scarcity have become make-or-break factors for where you can even build one of these multi-billion-dollar campuses. It's a huge, often hidden, but absolutely critical constraint.
Okay, so now we get to the fun part, investing in the bottlenecks. Because from an investor's point of view, all of these constraints we've been talking about, the grid, the cooling, the power, they aren't just problems to be solved. They are massive opportunities. The real value here isn't just in the flashy AI models, it's in the boring physical stuff that makes it all possible.
So let's start with the grid. One way to play this is through ETFs, or exchange-traded funds, which are basically just baskets of stocks. You've got two interesting angles here. On one side, you've got an ETF like PAVE. Think of this as the earth-moving fund. It's invested in the companies that are physically building stuff, the construction crews stringing the new wires and pouring the concrete. Then, on the other side, you have an ETF like GRID. This one is more about the smart engineers. It focuses on the software and digital tech that makes our existing grid smarter and more efficient. So PAVE is really a bet on the immediate physical construction boom, while GRID is more of a long-term play on managing all this new complexity.
You see a similar dynamic in electrification. Again, two very different flavors. You've got something like ZAP, which is mostly a play on utilities. It's stable, it pays a decent yield, but profits are regulated, so there's a ceiling. Then you have Volt. This is a totally different beast. It's an industrial and equipment play. It's designed to capture what some people call hardware alpha. Basically, it's a bet on the companies making the really specialized, high-margin gear, the transformers, the switchgear, that these new high-density data centers absolutely require. Yeah, it's going to be more volatile for sure, but the potential for growth is just so much higher.
And understanding the timing of all this is absolutely crucial, because this isn't just a one-and-done event, it's a multi-year cycle. Right now, we're in the early innings. The most pressing needs are for things like power electronics and grid intelligence software. Exactly the stuff you find in those Volt and Grid ETFs we just talked about. Then, as we move into the mid-cycle, you'll see demand for raw materials like copper and those advanced cooling systems really start to take off. And finally, in the late cycle, the value will kind of mature and settle with the long-term owners of these assets. Think data center REITs and the big traditional utilities.
So how could you actually put all this together into a portfolio? Well, here's one potential model, a kind of growth-optimized portfolio looking out towards 2026. The idea here is a barbell structure. So on one end of the barbell, you have your high-growth, high-potential plays like Volt and Grid, targeting those immediate hardware and software bottlenecks. On the other end, you have your structural stabilizers, things like nuclear power, water technology, and broader infrastructure plays to keep things steady. And then right in the middle, you get exposure to critical materials like copper and direct plays on the data centers themselves. All right, let's wrap this up. As we look ahead to 2026 and beyond, what are the really key takeaways you should remember from this whole physical infrastructure story?
Well, I think the market is still underpricing a few really important things here. First, the fact that a simple grid connection, that scarce spot in the queue, is becoming a valuable asset in and of itself. Second, the thermal problem. The ability to cool these things effectively is shifting from being just a cost to being a primary driver of who wins and who loses. And finally, just to hammer this home, this is not a temporary hype cycle. This is a fundamental, long-term shift that's being dictated by the cold, hard realities of physics, power, and water.
And that really is the most important point to take away from all of this. A portfolio built around these ideas isn't betting on AI hype. It's betting on physics, thermodynamics, and the reality of the grid. You're not speculating on which AI model is going to win the war. You're betting on the durable physical laws and the tough logistical realities that are going to shape this whole revolution for the next decade. It's a bet on the modern-day picks and shovels of the AI gold rush, the transformers, the copper wire, and the cooling pipes. I really hope this has given you a new way to think about the future of AI. Thanks for watching.